Welcome to Taking Stock, Empower's first thoughts on leading financial news. I'm Vanessa Welch. With the presidential election just 4 days away now, today's jobs report could impact how voters perceive the economy. Recent events like hurricanes and strikes have muddled the employment picture. So here to break down those numbers and their implications is Empower's chief investment strategist, Marta Norton. Marta, good morning.
Good morning.
The report indicates that job growth has cooled largely due to the impact of those severe storms and ongoing strikes, particularly at Boeing. Marta, how do you think we should interpret this data, and what does it mean overall for the health of the economy?
You're absolutely right, Vanessa. This is a messy report. In fact, it was anticipated to be so messy that economists were encouraging investors and likely the Fed to look through the report when assessing the economy. That doesn't mean there's no signal here. The BOS has said that the household survey's responses were actually within a normal range. And of course, it's a household survey that determines the unemployment rate. The unemployment rate held steady at 4.1%. That's a good thing. We did see permanent job losers tick up. And that's something we're watching closely to get a sense for what layoffs could look like. Now, on the payroll front, we did see revisions of an order of, 100,000, slightly more than that, to prior months. And that suggests that maybe some of the euphoria in the September print can and should come out of that. So taking all of this together, I would suggest that we're looking at a cooling labor market. I want to be careful when I say that. A cooling labor market is not a collapsing labor market, so more normalization, more moderation.
It seems while the immediate numbers show a decline, the overall health of the economy can still be resilient. Marta, I'm curious, with these disruptions affecting jobs numbers, do you believe the Fed will adjust interest rates based on this jobs report when they meet next week?
That's a big question. It's been bouncing around the media quite a bit. I think when we're taking a look at this number and the messiness of it, I think the Fed really will look through it. And what the Fed has said is that its base case is really 2 quarter-point reductions in November and December, or 2 25 basis point reductions. I think with this number, that doesn't necessarily change that base case. And I think a reasonable expectation is still to see that quarter-point reduction. In December, I think it's a little bit more of a question mark. If we were to see consistently strong economic data, surprising by a wide magnitude, I think there's room for the Fed to take a pause. That's an outside probability, but it's within the range of outcomes.
Yeah, it will be interesting for sure to see how they proceed. So in light of this cooling jobs report, Marta, where should investors be looking for opportunities right now?
Well, what's so interesting is that this messy and somewhat mediocre report is actually good news for investors. As we take a look over the course of the fall, we've seen pretty resilient economic numbers, surprisingly so. And that's taken a lot of the Fed cuts out of market pricing. That's a big deal, not just for bond investors, but also for equity investors, since this broadening out trade, or the idea that other investments outside of the Magnificent Seven could start to accelerate, a lot of it was predicated on lower Fed rates. So this number in particular potentially holds that trend at bay, at least for the near term.
Yeah, big question. We're going to end on this one, Marta. Do you see any election impact here based on these numbers?
So I think there's something for everyone here. I think the Trump campaign can point to the payroll numbers. I think the Harris campaign can point to a steady unemployment rate. I think the reality is that very few people are going to be looking at this number to make an election determination. They're going to look at the broader economic mosaic. And what's interesting is that everyone has a different interpretation to that. Main Street has a different interpretation, for example, than Wall Street. And of course, it's more than the economy. It's also going to be social issues. And all I can really say at this point is that this election is very close.
It sure is. And Marta, you always remind us it's policy, not politics, that impacts the markets and the economy. Great insights as always. Marta Norton, thanks for being with us. And thank all of you for taking time to watch Taking Stock today. We hope you have a great weekend, and we'll see you back here next week.